Hi there. In this session, we will have a discussion regarding the application of IFRS 15, how we can initially apply IFRS 15, and what are the transitional provisions that are available under the IFRS 15 regime. So let's go. Learning outcomes. After completing this session, you will have an understanding about the approaches or the methods provided under the IFRS for the first time adoption. And we will also go through the definition of certain terms that are used under the IFRS so that we can leverage those understanding to understand some key concepts in the near future. Before moving towards our discussion on application of IFRS 15, let's have an understanding on what do you mean by date of application. As provided by the IASB, the initial date of application would be the accounts beginning on or after 1st January 2018. So now I'll have an example. Like suppose your account's closure date is 31st March 2018. Then in such a case, for the next year, your account will begin from 1st April 2018. 1st April 2018. Then in such a case, your initial date of application would be 1st April 2018 because your account is beginning from 1st April, not from the 1st January. So do not consider it to be a hard and fast rule that we have to apply IFRS 15 from 1st January. No, you have to apply IFRS 15 for accounts beginning on or after 1st January 2018. So keep this thing in mind, it's really important to understand. The fourth point. The fourth point is what are the different approaches that are available under IFRS 15 for the purpose of initial adoption? So there are two approaches that are provided by the IFRS. The first one we will discuss now. The first approach is full retrospective approach. Now let's have a discussion on what do we mean by full retrospective approach. The entity those adopting the full retrospective approach, they have to apply the standard in accordance with IAS 8. That's it. So IAS 8 under the IFRS is deals with accounting policy and changes in the accounting policy. So whenever an entity apply full retrospective approach, okay, nothing. The entity has to comply with IAS 8. That's it. Now let's discuss what IAS 8 says. IAS says that whenever there is a change in accounting policy due to introduction of a new standard itself, the entity shall account for such change in accordance with the specific transitional provisions. If not, then entity need to apply the standard retrospectively, which means that either they can apply the transitional provisions, which is this one, or they can apply IFRS, or they can apply it retrospectively, which means IFRS 15 is there from the inception. There is no from the inception. There is no IAS 18. So they are under full retrospective approach. It generally referred to IAS 8, and IAS 8 says you need to refer to transitional provisions, which is this one, and ultimately which is referring to the IAS 8, or they need to apply retrospectively. So which means you need to apply the standards requirement retrospectively till its inception, and I will add something here, till it is practicable to apply this. If it is impracticable, you cannot do it. Till the time you can apply the standard, you have to apply it. Because the body understands it's a hell of a requirement under the IFRS. So there are some practical exceptions. We will go through them in detail when I'm going to prepare a full set of video on full retrospective approach and discussing the limitations, why people should not go for full retrospective, or they should go for full retrospective approach. So we will discuss that in detail. So for now, just understand what do you mean by full retrospective approach. You need to apply the standard, all the provisions of the standard since the beginning and since the inception of your entity. That's it. Under the second approach, that is a modified approach. The modified approach is very simple. So you need to apply the standards requirement as on the date of initial application. Suppose you are applying standard on 1st April 2018. Then in such a case, you need to apply the requirement of IFRS 15 on all either on all the contracts that are there on this date, or you can apply it to all the contracts which are yet to complete. So you have two options. You can apply to all the contracts till the date of initial adoption, to apply retrospectively to only to the most current period. Under this method, IFRS 15 will be applicable either to all the contracts at the date of initial applications. Whatever the contracts you are having, it may be completed, it may be incompleted, whatever the contract it is, you have to apply the standard. Or only to the contract that are not completed at till this date, depending on how you elect to provide it. So there is a definition of completed or an incompleted in the standards. So, to summarize, in case of a modified approach, you need to apply the standards requirement either on the contracts that are there as on the date of initial application, or you can apply to all the contracts that are yet to complete. And it says as on the date of initial application. Sorry for my handwriting. 6 points. Definition of certain terms. Now, we've already discussed something called practical expedient. Because the requirement under the standard is such huge that an entity may not be able to apply the requirements, and they have to be practical. So there are some exceptions, and um, there are some exceptions provided by the IASB that you can use this, you can have some liberty, you don't need to follow it strictly. So there are some practical exception that we can term it as practical expedient. Practical expedient is nothing more than a practical exceptions, because on the practical ground some requirement of the standard may not be able to perform, then we will give you an exception for that. Now, what do we mean by completed contracts? Understand my point. Completed contract has a really good level of significance in IFRS 15. So, what do we mean by completed contract? It means the entity has fully delivered all the identified goods and services before the date of initial application, which means that suppose the initial date of application is 1st January 2018, it has delivered, not rights and obligations. I'm not talking, this is pure English. It has delivered all the goods or services that are required to be delivered under the contract. Suppose an entity is required to deliver 1000 pieces of 1000 kgs of material X, and they have simply deliver the material, then contract X, we can say that it is complete. This is complete, subject to buyer's acceptance plus buyer's acceptance. It should be there. So if this is done, we can say that the contract is completed. So this is the main crux of IFRS 15, and we will drill down to each of the approaches in detail in subsequent videos.